Can't believe how much all this rubbish on the beach. It's just heartbreaking after the storms and all the rain and everything being washed out and then coming back up on the beach. Little pieces of foam from pontoons that are broken up. Anyway, we'll do the best we can. So what have markets been doing? That's the important thing, right? Well, this is our money market update, a weekly update as to what has been going on in financial markets. How can you as an investor just make general sense of everything that's going on to be able to make really good rational decisions? So I trust you enjoy this weekly update, and excuse me for picking up a little bit of rubbish along the way. So obviously there's a lot of concern around Ukraine and Russia, and markets are nervous, and obviously on Friday we actually saw them down again because of some fears around these nuclear reactors, etc. But at the end of the day, I just want to sort of frame what's been going on for the past, couple of months and make sure that we understand how to look at things correctly. Inflation has been the big problem in the US. Inflation has been the one thing that I call it the elephant in the room this year with respect to whether or not share prices are going to continue to go higher. And inflation is around 7% in the US at the moment, and the US Federal Reserve has said that they're going to raise interest rates. Now, what we generally see in an environment where we've had low interest rates for effectively 10 or 12 years now, we did see rates in the US go back to about 2.25%. But the bottom line is interest rates have been zero for the last 10 years in the US predominantly, and asset valuations just go sky high when you have money basically for free. So share markets have been very, very high. And we've got a lot of businesses that don't make any money, that don't have any earnings. They've seen their share prices rally very strongly. Now, when you have companies that don't make any money and people are buying those shares for future earnings in the future, then when interest rates start to rise, the debt that they have is harder to service, and therefore there's a revaluation of the share price. So there's been a lot of businesses around, just watch behind you here, there's a lot of businesses around that has been seeing their share prices go down 20, 30, 40, and even some 60 and 70%. You look at PayPal, look at lots of other businesses that you can find that have seen their share prices rally very strongly in 2020 and 2021. Tesla's another one. Their price to earnings ratios are sky high. However, they're really not producing the earnings to justify the share price. So they've seen their share prices fall very sharply. Now, when you put all that together, and in the mix of a geopolitical event, the biggest geopolitical event we've seen since 1945-46 in the Second World War, then you're just naturally going to have financial markets going to be a little bit nervous. And we're going to see some money coming out of financial markets onto the sidelines until we start to see some stability and what is going on. Now, the one thing that I want to remind you though is that if we go back and look at history, what history will show is now is not the time to bail. Now the time is to buy, provided you own great quality companies. I can see some more foam up here, we're going to go and get it. Now is not the time to bail on a great quality company. Certainly if you own businesses that are not making any money, that have seen their share prices rally very, very strongly over the course of the last few years, you may need to sell those businesses and move that money somewhere else. But the bottom line is this: in the next 2 to 3 months, we're likely going to see continued volatility in financial markets as we wait to see what happens with inflation. What is going on in Ukraine is a crisis, but these geopolitical events, and you may want to have a look at this graph right on the screen here now. You can see there, geopolitical events don't move markets for very long, and generally speaking, when we look into the future and when we look back at these geopolitical events, they don't impact markets much at all, and they're actually buying opportunities, not selling opportunities. So what's been going on right now? Markets have been a little nervous. Check out that sunrise. Bottom line is, the US economy is super strong right now. An amazing jobs number on Friday, close to 700,000, unemployment rate 3.8%. The economy is strong, inflation is high. You might be thinking to yourself, when are share markets going to go back higher? Well, share markets are actually not very much lower than where they were prior to the Ukraine crisis starting. So there's no panic there. There's a little bit of gloom around that, but the market's more worried about inflation and what is going to happen with interest rates. Are they going to raise them quickly in the US because of inflation? At the end of the day, share prices are going to go back higher and rally strongly, in my view, when the market figures out, hey, inflation is starting to come down. And I think that's probably going to be in the middle of the year, in the second half of the year. So let's wait and see. Now, there's a few other things that I want to have a chat with you about this morning. Let's get back to the house and have a coffee and do that now. All right, so down on the beach we're talking about some of the negatives in financial markets and about the geopolitical event that's happening over in Ukraine. So let's now talk about a couple of bright spots that happened in the market this past week. Jobs number on Friday in the US came in at 678,000 jobs created in the month of February, which was much, much higher. The market thought the US was going to create about 400,000. So it goes to show how strong the US economy is right now. That jobless rate, the unemployment rate in the US is 3.8%. So more Americans are making more money. That means more Americans are likely going to consume more products and services. Therefore, the economy is nowhere near recession in the United States yet. So that's one of the bright spots. Now, the other bright spot was Costco's earnings. Now, I've got a few numbers that I want to share with you here. Costco is an amazing business. It's not talked about a lot in the press because they want to talk about the sexy businesses like Tesla and, Twilio and all of these startups and Snowflake, etc. Earnings per share, let me read you some notes. Earnings per share, $2.92 for the quarter. Net sales up 16.1%. Floor traffic in all Costco stores around the world up around 9%. By the way, Costco has 828 stores around the world, and they're planning to open another 32 stores in the next 12 months. Do you know how many stores they have in China? 2. Only 2. Just imagine, they have over 560 in the US. Just imagine if they had a couple of hundred in China. Anyway, traffic up 9%. Costco, this is where the money is for Costco, is in their membership. Membership was up 9.8%. And the renewal rate of membership, meaning that when people's membership is due for renewal after 12 months, how many people do you think at Costco that have a membership actually renewal? It's 90%. That's how much value Costco delivers its members. 90% of people want to renew the membership. So Costco was a bright spot. The jobs report was a bright spot in the back of what was really a lot of doom and gloom around Ukraine, which is devastating. But as I said down on the beach, these geopolitical events, history shows that they come and go, it will end, but the challenge is the uncertainty of when will it end. But I think the market right now is still going to have that challenge of inflation in the back half of this year. Is it going to go down? If it does, markets are going to go back high. Now, one of the big negatives right now with inflation is high oil prices. I noted that oil prices jumped up again through the Friday trading session up to $115 a barrel for West Texas crude. Inflation in many parts is driven by oil. I should say oil is driving inflation higher. What is going on in Ukraine is not helping with respect to inflation. But at the moment, the challenge we have with oil is that through the COVID pandemic, exporters or producers of oil didn't spend the right amount of capital expenditure to be able to increase supply. So right now we have this huge demand for oil as the global economy reopens from the pandemic, and supply cannot keep up. Now, Russia is a big supplier of oil and energy to Europe. It only supplies the United States with about 3% of their oil demand, and that's going to be cut off. US oil producers will have to lift up their game. But right now, we have a situation where if Russia is taken out of the scheme of things in Europe with respect to nobody's going to buy their oil, of course, Germany's going to buy their gas and some of their energy in other parts of Europe, but a lot of their oil is going to not be able to find a port or a ship or any way of getting to anywhere. So therefore, the supply is even going to be constrained even further. I could see oil prices at 125, 150. If we saw oil prices at between 125 and 150 for the rest of this year, that would pose a problem for the global economy with respect to inflation, and we could end up in a scenario where we could see a recession. Now, I'm not predicting it, I'm not saying it's going to happen, I'm just telling you that if oil prices remain elevated and continue to go higher, which I don't see any way in which oil prices go down right now, because the bottom line is, if you actually do the research, the supply, it cannot keep up with demand. Even with Russia, and take them out of the equation and it's game over. Oil prices are going to continue to go higher. So I expect here in Australia we'll be paying over $2 a litre. I expect in the United States we'll be paying $5.50, maybe even $6 a gallon. In the US, that will just kill them over there. They don't like higher oil prices. None of us do. But anyway, that's a little bit of a negative to finish off there. Now, I've got a trading tip that I want to share with you every week here on this Money Market Update. So let's get to that trading tip right now, because I think it'll help you understand how to have the right temperament as an investor. Meet Charlie. Charlie is our beautiful golden retriever. Aren't you, Gil? Yes, Rosie. Yes, we have another one too. Black lab. All right, so trading tip. When am I going to make money? When is it going to go up? When are we all going to be able to get rich? You know, everybody wants to know when. They're transfixed on when is something going to happen. One thing I've learned over the course of my trading and investing career is that if you focus on the when, and if you transfix your mindset on when is something going to happen, and you try to predict when a low is going to be or a high is going to be, or you know, worry about the when, you're not probably going to do very well in financial markets. What you want to focus on is not the when. You want to focus on what. What is likely going to happen in the future? So let me give you an example. You buy some shares of a company and you're keen to see it go up in value to realize some profit. That's focusing on the when. When is it going to go up? And I would say 98% of people are focused on the when. If you can focus your attention on when you are looking to invest in a company, you say, what is the likely outcome for that company in the future that's going to grow its earnings? For example, before we're talking about Costco. Costco is going to continue to grow its earnings over the next 5, 10, 15 years as it grows more stores, as it continues to run its exceptional business. What will likely happen in the future is what you want to focus on, not when is it going to happen now. If you focus everything with regarding your due diligence and all of your assessment of the investment you're about to make on what is likely going to happen in the future, then you're going to do much better, because none of us know. Warren Buffett doesn't know, Charlie Munger doesn't know, Joel Greenblatt doesn't know, Peter Lynch doesn't know, Monish Paprai doesn't know. These are legendary investors. They don't know when the price is going to go up. What they know is the price is going to go up over time if they're investing in a great quality business. So my tip for you today is forget about when. Don't ever think to yourself, when is this going to happen? Focus on what is likely going to happen. All right, so earnings season, first earnings season of the year is basically over now, so that's finished. So we've got some key economic data coming up this week. I don't think this is really going to grab the market's attention too much, due to the fact that the market's likely going to focus on one piece of economic data. We've got European GDP out on Tuesday, so growth for Europe. That's not going to be significantly down on Tuesday, because this is looking back over the past month or two and what's going on right now. We're going to see lower growth in Europe in the coming months, but this number on Tuesday is not going to impact markets, I don't believe. Australian consumer confidence numbers on Wednesday, not going to impact markets, guys. We've also got on Thursday, this is the really, for want of another phrase, the elephant in the room coming up this week, is the latest US inflation number on Thursday. That's what the market's going to be focused on. So right now, inflation is a problem in the US. The Fed's going to raise interest rates in March. They're going to try and bring that down. But that number on Thursday could excite the market if inflation comes down a little bit, or could be a dampener if inflation is a little higher. And then on Friday, we've got UK GDP. Again, just like the European GDP, probably not going to impact markets too much.
this coming week. So not a huge amount on the economic calendar that's likely going to impact things. Traders, of course, will be focused on what's going on in Ukraine. But just remember, focus on the what is going to happen in the future. What is going to happen is this crisis will end at some point. What will happen is great quality companies will continue to grow their earnings, and provided you own them, you're going to do very nicely over time. Sit on your backside and enjoy the ride. The more you buy and sell, the more you jump in and out, the lower returns on investment that you're going to make. So I hope you enjoyed our very first Trading Mastery Money Market Update. We're going to have one every week for you going forward. I hope you really enjoyed it. And by the way, if you're not a client and you would like to learn how to build a portfolio and how professional investors like myself and our clients here at Trading Mastery make meaningful returns on investment, get across to our website, tradingmastery.com, and you can download a 7-part mini course that will get you started. The link is right there. You can click on that or just jump on the website, and we look forward to seeing you in one of our upcoming live coaching programs. All the very best. See you next week.